You too. Hey, for more on the markets and how it may be impacted by the election, I want to bring in UBS First Vice President, Wealth Management, Mark Smith, along with Kingsview Wealth Management, CIO, Fox Business contributor, Scott Martin. Scott, I want to pick up on the conversation I was just having with Bob. Just overall, your assessment of this market and this sort of gyrating moves that we're seeing.
Yeah, it was a great convo. You guys point out a lot of really what we're seeing, too, is that there's kind of these cross currents or undercurrents, really, Charles, below what seems to be a pretty calm surface. Now, I think the market is kind of doing this waiting for Godot thing. Yeah, I took French in college, where you're basically waiting for the election results. And I don't think really at this point, Charles, it matters how the election turns out right away, at least as far as an immediate impact, because the market, I think, has already factored in a Biden win. So maybe a Trump win actually provides a nice boost. But the reality is the market is looking to get past that next big event. I think you guys are right, too, on earnings. Earnings have been decent so far, but not quite spectacular. We saw some of the spectacular earnings just a quarter ago. That juiced the market pretty good. The market's getting what it wants, maybe not quite enough of what it wants, but that'll keep stock prices here until, say, November 3rd.
Mark, what's the market telling you? What's this sort of sideways gyration telling you?
The market doesn't like uncertainty, and we're uncertain about a lot of things. We're uncertain when we're going to get the stimulus. We're uncertain when we're going to be able to go back to work and stop being on Zoom all day. And we're uncertain about who's going to be the president of the United States. So there's a lot of uncertainty. Markets are going to continue to go back and forth until we get some certainty there. And then I think you're going to have potentially a lot of upside in a lot of different sectors depending on who wins.
Mm-hmm. Okay. Well, in the meantime, Scott, I want to point out you've crushed it with gold. I mean, it's been a little sideways, but you're up huge. And now I'm thinking that maybe it could take off as we get higher inflation, because that's not an inevitability if we do get trillions and more in stimulus next year. The question is, we know to be good for your gold position, but would it also be good for stocks, and for how long?
Yeah, it'll be great for stocks, and I think that could be a long-term boost for stocks, Charles, because you'll see the rise in earnings in coordination with the rise in just general inflation numbers. As far as gold goes, thanks for the props. Yeah, it's been a great holding. Now, I'm happy about, the total return in things like GLD this year, 23, 25%, whatever the number is. But here's the thing. It's more like the profile of the return that's been big on gold, Charles. It's the fact that gold, held in there in the March and April months. Gold is held in there in the pullback in September. So to me, gold is more of a great trophy and crown to wear here, but it's more about what it does to your portfolio to limit volatility and drive in that non-correlation value that stocks and bonds sometimes don't have.
Scott, I like your humble brag. It's up maybe 23, 24%. You know exactly
give or
when
take,
it's up, second to second, minute to... All right, listen. The market, we know, grappling for leadership. That's another thing that's been pretty distinctive the last couple of weeks. So at times it looks like a rudderless ship. Mark, I know you like industrials and materials. You think they can lead the entire market, though, higher as we go into next year?
Listen, I'm a value investor, and so are my clients. So we're looking for where the value is, and that's in the industrials and materials space. They're lagging the S&P 500 year to date, but the story's great. You're seeing China pick up spending, unprecedented spending that you're seeing over there. We're seeing on the material side, they're going to do well because there's no inventory for housing. If you're trying to buy a house in the suburbs, good luck. So you got to start building more homes, and so the materials are going to do great in that type of environment. So the value play is, I think, in those two sectors, no matter who wins in November.
I tend to agree with you 100% there. Guys, I got less than a minute, but if you can, just a change in your portfolio or words of wisdom before we head into the weekend. Scott, first, I'll start with you.
Well, I think I'll just go with Mark's theme. We're looking at value nowadays, too, and I think another area I'd look at is financials. Charles, we talked about financials a lot, some on good weeks, some on bad weeks, but the reality is if you're looking for cheap stocks and looking for stocks, too, that might benefit from a steepening yield curve, look no further than J.P. Morgan and Citi, which are two companies we've been adding to here.
Okay, Mark.
I say that continue the dollar cost average, because you're never going to know when the bottom is. You know where the top is, but continue to add money every single time you get a check, put it in the market, and you're going to do well over the long term.
My man, I love that. I love what you just said. Words of wisdom I wish everyone would live by. Mark, Scott, gentlemen, have a good weekend. Mark, next time you come on, you can humble brag too. All right, folks. President Trump using last night's debate.